Have you ever asked yourself what's actually worse than a recession? And the simple answer is stagflation. You guys probably heard the term around here before. You probably heard it in different content creators around YouTube kind of throwing that out now. But what does stagflation actually mean, and why is it worse than a recession to boot? So we're going to be talking about that and more. We're going to talk about what the latest PCE number comes in at, what the GDP told us this week, and where the levels that we're going to be looking at this week to know if we're going to be bullish, we're going to be bearish, are we going to long-term bearish, long-term bullish, all that and more. So first of all, let's dive into what the definition of stagflation is. And simply, it's when prices for things for gas at the pump, which you guys can relate to, gas going up all over the place, food in the grocery store continue to rise, aka sticker shock, while people's means to spend decreases, as we saw in the bank earnings this week that we covered on the live stream and videos subsequently after, that they basically said consumers are putting more on their credit cards, which AKA basically means that they're not having the ability to spend, right? If you put it on the card and you're not able to pay it back, that is the classical definition of stagflation, really. And also that's solidified by the data points we got this week with GDP coming in at 1.6. So remember, everyone didn't care that GDP was above 3 and 5 because inflation was lower. That was the narrative that we were told. And well, the narrative has finally broken. We're basically up shit creek without a paddle. And this is why. Simply put, core, which is nothing of the volatile stuff. We're not even talking about the fun stuff. We're not even talking about CPI being over 3%, or CPI like we like to call it. It is because 2.8 is larger than 1.6. If you took high school or middle school math, you can understand that. And it's very, very simple to understand. This number means your wages per se, the economy is growing at 1.6% and the inflation is growing at 2.8%. Would someone like to reiterate the definition of stagflation, where prices go up and your means to spend go down? Classical definition of stagflation, guys. And if you were mashing the buttons this week, it was a fantastic week, volatile week on the market, right? So the S&P actually had a pretty nice week, right? So if we take a look at this in hindsight, right, we were talking about we could not violate 493 and we didn't, right? So it was a pretty nice opportunity to go bullish, to go bearish. You had opportunities both ways. If you were mashing the buy button, if you were mashing the sell button, it was actually profitable for both teams this week. However, we're going to be talking about which way we got to look at next week. And there is one more button you guys need to mash, and kindly ask you to hit the subscribe button and have bell notifications on. We do live stream earnings, and we will be live streaming the Fed Wednesday for the Fed and Thursday for Apple earnings. We will cover Amazon earnings in a separate video. I just have another responsibility that I have to attend to for that day, so we won't cover Amazon earnings live. However, for all those that love Amazon, we will be talking about Amazon in the later section of this video, so make sure you guys stay tuned for that. And without further ado, let's dive into what levels we have to pay attention to. Let's clean up the chart from last week. So as we see here, and the chart nice cleaned up for you guys, the levels we have to pay attention to are very, very range bound for this week for the S&P, and that is simply 509.08. Now, I'm giving you guys the cash market levels just because that's what you guys traditionally trade. We can talk about SPX, but make sure you guys throw in the comment section below if you would like to have the XPX levels and or the futures levels. I'll make sure to cover that, but I just want to see if you guys have interest in that. But 509.08 and 505.70, the daily range from the previous day to the upper previous week's range, that is where we have to look at getting direction. I think once we have a directional move out of this area, because price has transacted quite much around here, we will set the tone for the rest of the week. I don't think anyone's going to put too much risk going into Powell because stagflation is going to be the question. Now, going Tuesday into Wednesday, we definitely could get a bullish reaction. Let's say we're not above 509. Amazon comes in, smashes that number, then I could easily see us coming up and testing this area up here. 509.88 is the area of resistance because that is the weekly high that we established. That was a failed weekly higher high, which gives us more intonation and risk to the downside, right? So if I was going to play this, I would definitely be looking at skewing opportunity to the downside because my short-term downside to upside opportunity, right? So if I'm basically saying we're going to get to 509 and I shorted right at the previous weekly pivot to the 50, closing above the 50. I know I'm wrong. That's only 0.4, right? That's my risk reward versus I can get all the way down to 2.8% reward on the bottom. So that's like a 6-to-1 ratio, which is fantastic for me, right? That's what I would want all a day long. And looking at this, that's what I would be looking this week, depending on how the market's moving and everything, what's coming up, right? So if we're not at 509 and we're heading into Powell, obviously the best strategy there is going to be to sit on your hands and wait for that bullish or bearish reaction after Powell finishes talking, guys. I can't stress that enough. I have had trades blown up because Powell said something midway through his speech and the market completely reversed. So usually, even though you miss out on some of the gains, if you were going to pit that direction anyway, my recommendation is sit on your hands until the man stops talking. That's just my 2 cents. But if we come back, why is 505.70 important? Well, that's your gap fill. If we're coming back and filling this gap, we're threatening the 9-day moving average, and then we're threatening all the downside because, hey, it took us so much momentum to get back up here. I don't want to retrace that momentum, especially because we weren't doing it on high volume, right? If we look at what was high volume, the preceding candles here was your high volume. They were all red. The green is subsequently very meh volume. And that's why coming back through this level would be very, very dangerous because there's no support. There's no one's excited to buy, right? If you guys were trading back last year, you remember CPI excitement. That volume candle was ballistic, right? The bulls were buying every single little thing. I'm not saying that can't happen again, but I want to see the evidence on the chart. Now, for all those tech fans out there, let's just jump over to the NASDAQ and clean up the chart for you real quick here. So the NASDAQ chart looks awfully similar to the S&P chart, right? Similar story. You got to get above the weekly high. And actually that was your previous rotation. 432.74 was your previous rotation point for a couple weeks support back. We broke below it, failed to hold up over here, and then we went lower, right? So that's a very, very crucial level. That's where I'm going to be looking for the NASDAQ to completely close above it, not just test it, right? So that is where I'd be looking at, okay, breakout territory. 436.28 is the next test, which is around the 50-day moving average. You guys have to analyze it per day as that's going to change subsequently from the time of this video. But really anything below 426.92 is short opportunity all the way. That is your gap fill. That is where volume was anemic, right? Looking back at this other bearish volume back here in comparison. And then we're going to start threatening that 420 level. Yes, the jokes write themselves. And then the 413.94 level, and really the previous low, we can actually snap it right to there, 413.07. You break 413.07. Yeah, there's no hope at that point. We're looking at bearish territory all the way to the 200-day moving average sitting at 397. So again, if you're longing this market, you got to be prepared that we could get that 10% correction because usually these downturns last at an average of 16%. What would that be from the all-time highs to there? We're looking at 11%, so meaning we're at a minimum going to go down there if this is a correctionary wave. If this is a traditional buy the dip, this should be it, and we're not sending any A to B patterns on the way down. If we just see, right, my eye catches possible A to B pattern on the way down, if you're looking at that bullish approach, hunky-dory, landing at 399.29. So that 200-day looks like an ominous target if we start rotating down below. And that is a potential on the NASDAQ of approximately 7%. And we'll jump back over to the S&P just shortly right here just to see where its support could as well if we're looking at A to B patterns on the way down, right? So saying hypothetically this is your A to B, coming back, retesting 481. So everything's kind of being a little mimetic right there, going back to these levels right here where it's like these crucial levels that you have to bounce for this A to B pattern, meaning you should find support and everything's kind of pointing down there. But that doesn't necessarily mean that we have to go down there, right? Like we can look at different evidence. We're going to look at Amazon. We're going to look at Apple to tell us where the evidence is pointing to that we're going to be going, right? So we covered a bunch of these companies previously, but let's just jump over to Apple, right? Apple looking still in a dominant downtrend, lower lows and lower highs. So again, that is telling me that there's not excitement going into earnings. I want to see the chart fix itself before I go saying, hey, this is a bullish chart, right? If we're selling off into earnings, possible meme reversion or possible Tesla, right? So it's very, very possible that we just get more bad news and more bad news, right? It is very, very possible. Amazon, like I said, was one of the strongest going into their earnings, right? Still holding above the 50, still holding above the 9. We had a momentary thing with Meta where it dragged it down, but everyone was buying Amazon up, right? We were trying to go for that gap fill. We left a double gap there. So Amazon has the potential to go very, very high and very, very low, right? So it's going to be the major catalyst on Tuesday going into Powell, which is going to be like the Huba catalyst that could reverse every single thing that I'm talking about. And last but not least, let's just jump over to RSP, right? RSP looking like it's consolidating here, but is not moving like the rest of the market. So is it setting up for a massive move? I would argue yes, because this is massive consolidation, meaning we have potential to go one way or another. I will keep an eye on RSP for you and keep you guys updated. And last but not least, I said if VIX started closing below 17, I'd be looking for that $15 retest. We got that $15 retest. Now the question is, does $15 hold? If we're going into Powell and we are back at the 12s, let's say on VIX, I'm going to be buying insurance going into Powell just because that has been a floor for VIX for quite some time. And it's Powell. Shall I say more, right? So we're going to be looking at all these things, but really the risk on indicator, Bitcoin consolidating in this region right around the 50. It's actually below. So let's see if it holds this area or fails to hold, because remember, it broke down the trend and now we're looking at lower lows and lower highs. So we have to see how Bitcoin, which is the risk on mentality in the market, is going to trend out. And that's last but not least, fear and greed actually ticking up subsequently from each day, right? Going from 38 to 40 to 42, meaning there is some bullish sentiment still in this market, not really being overly zealous, but the bulls are still stepping up into there. And the one thing I really enjoy talking about now is the net speculative positions. So we look here, they decrease their overall exposure. However, these guys are going ham on the S&P, meaning the market only has one team to steal money from. The bears are gone, right? They've lost all their money. So the bulls, they're the only ones that have real exposure here. And as we saw with the whole market as a whole, that this is an area where it looks to be where the market's going to want to steal everyone's money. Now, let's just quickly recap the week, right? Monday, nothing much. Tuesday, home prices with Chicago PMI. Amazon earnings on Tuesday. Obviously, that's going to be the showstopper. And then we got ADP non-farm payroll in the morning on Wednesday, along with job openings, which is going to be right as the Fed is coming out for their 2 o'clock press conference. They're expecting rates to stay the same. Not really looking at that as the market mover. I'm going to be looking at what Powell and them say and their statement, right? What is going to be their statement with this? We do not get an SEP with this one, but it's going to be very interesting to see the summary of economic projection in June or July. I believe one of those meetings is associated with it. So obviously Thursday we got Apple, and then payrolls going into the subsequent Friday, which we're basically seeing unemployment staying the same. They're expecting private payrolls to tick down a little bit and non-farm payrolls as well to decrease about 50,000 each. Subsequently, manufacturing to increase, which I think it's going to come in at -7. Just my 2 cents. And average hourly earnings coming in at 0.3. We don't have year-over-year expectations, but I'm assuming it's going to be around the 4s, just because if the month-over-month's not really decreasing, the year-over-year subsequently won't be decreasing. So without further ado, guys, we're going to jump over to Fatal's part to give you the biggest winners and losers, and then we'll be back to talk about Powell, stagflation, bank failures, which we didn't talk about. We actually had a bank fail this weekend. We'll be talking about that and more, so make sure you guys stay tuned for that.
It feels like every week something crazy new is happening, but that's actually the case because, well, today, guys, this past week was, I don't even know what to say anymore. I can't even put my finger on it because we had so many things happening. It was absolutely crazy. Not only did we have earnings, we also had PCE, which by far was something that we'd expected here on the channel, where PCE actually came in exactly the same for the core PCE, coming in at 2.8, the same as last month, but for the normal PCE year over year, it actually gained from 2.5 to 2.7%. So how would markets react when it came to this? Well, you already saw it on the first screen. They rallied on the day that PCE came out 1.02%. On the 5-day, guys, this is up 2.41%. And on the 1 day, as you guys just saw right there, the day that PCE actually came out, it rallied, even though PCE came in much higher than expected, and even showing that inflation is not coming down. Markets pretty much just said, yeah, we don't care about rate cuts anymore, so we're just gonna bring everything up. We'll see what happens when CPI comes in May 15th. Now, in addition to that, we also have this major breaking news that just occurred also on Friday. Regulators closed Philadelphia-based Republic First Bank, first U.S. bank failure this year. So this was a pretty small bank that just went out of business, went bankrupt, which only had roughly around $10 billion total, $6 billion in assets and $4 billion in deposits. We'll probably talk about more about this during the debate part, but it is something to note because this is coming off the back of the bank term lending program ending. And if this is the first one, there are probably others. So right now you've had a massive PCE coming in, right? Inflation is still roaring. Banks are failing. Markets are going up, and on top of that, you had a lot of earnings this past week that some of them were subpar, honestly. Some of them really did very, very well, but some of them were subpar. Now, looking into this upcoming week, however, there is a ton of earnings. Absolutely crazy. We got Monday, we got SoFi, Domino's Pizza, Phillips. On Tuesday, we got the big ones over here, Amazon, AMD, oh boy, SMCI. This one could either crash or burn because, guys, this one has been massively going up recently. So that's just after close, by the way. We also have after close Starbucks, and before open we got PayPal, Eli Lilly, 3M, McDonald's, Coca-Cola, and Enterprise Products and Partners, and a lot more. On Wednesday, we got Pfizer, Qualcomm, CVS, Devon, Barrick, MasterCard, and Carvana. And then on Thursday, we got the likes of Apple, oh boy, Coinbase, Block, DraftKings, Moderna, Peloton, and lastly on Friday, the really big ones here would just be Hershey and maybe XPO Logistics. Looking into now the heat map, guys, this is actually pretty green. It's not really surprising seeing that the market's rallied for some reason. By the way, this is on the week performance, right? This is on the week view. So let's get started with this. In the technology sector, we got over here, guys, the worst performer being none other than the company IBM, losing almost 8%, and the best performer by the looks of it, it is none other than the company Teradyne, I never heard about this one, gaining 18.92%. In the communications sector, I love it because here we literally have the two big ones, Google and Meta, doing the worst and best performance. And I love it because they're side by side. And yeah, it's almost a dichotomy over here. Meta was the worst performer in the sector, losing 7.85%. And Google was the best performer in the sector. Not only that, guys, but they also had earnings, which is the cause for this. But in addition to that, it is because of the fact that Google is now a dividend payer. So if you guys did not know that, now you know that. This was discussed on the live stream that I did, so make sure to check that out. And I also released a video based off of Google's earnings, so make sure to check that out as well. But yes, Google is officially paying out a dividend, which made them gain a little bit more than 11.5%. Looking at the consumer defensives, very, very green overall. Worst performer here, though, was the company Bungie Global SA, losing 6.2%, and the best performer, it is the company Keurig Dr. Pepper, gaining 7.05%. The healthcare sector is actually very, very mixed. Worst performer here is actually the company Bristol Myers Squibb, losing 8.34%, and the best performer, guys, by the looks of it, it is the company Boston Scientific, gaining 8.67%. Looking down to the financial sector, most of this is green, but also most of this is also very red as well. Worst performer here, it is none other than the company Aon, I don't know how to say this word, but losing 8.11%. And overall, though, the best performer, it is none other than the company Globe Life. Yes, guys, Globe Life, the one that fell off a cliff a few days ago, is now recovering back, as you guys can see by that graph, gaining 13.5%. Looking into now the consumer cyclicals, most of this is in the green. Pretty much the company had an earnings this week in this sector. They were pretty much in the green. Not all of them, obviously, but you had the likes of like Tesla gaining double digits, 14.44, and well, Chipotle also, I believe, also had earnings this week, getting 11.08%, though not the best performers overall. We're gonna get to that in just one second. The worst performer is actually the company LKQ Corp, losing 11.16%, and overall, though, the best performer, it is none other than the company Hasbro, gaining an astounding 16.65%. Now, the industrial sector is actually very much 50-50. Most companies well, as you can see, the ones that were green were very much in the green, as you guys can see by some of these doing like 13.02%. You know, you got 7.56% over here. Overall, though, the worst performer, it is the company in the trucking industrials, which is, I've never heard about this industry before, at least it's the first time I'm seeing it. ODFL, Old Dominion Freight Line, losing almost 14%, 13.88, and the best performer, it is the company Westinghouse Air Brake Technologies, gaining 14% on the dot. The REITs are actually very much in the green, all except for the specialty REITs. Now, we got over here the worst performer. It is the company Equinix, losing 2.19%. And the best performer, it is the company CoStar Group, gaining 9.96%. In the utility sector, also very, very 50-50, as we could see. We could see that the worst performer, it is none other than the company Excel Energy, losing 1.39%. And the best performer, by the looks of it, guys, it is none other than the company, by the looks of it, it is the company AES, gaining 4.94%. Now, for some reason, even though gas is exploding right now, the energy sector is actually not as green as you would think. Now, we got over here the worst performer being the company Phillips 66, losing 2.13%, and the best performer being the company EQT, gaining 10.8%. And lastly, when it comes into the basic materials, very, very easy to see the worst performer. We got Nucor Corp losing 8.33%, and the best performer, we got the company NEM, let me show that for you guys, NEM gaining 9.51%. All in all, though, guys, when it came to this week, absolutely, I don't even know what to call it, right? I don't even know what to call it. You would have expected markets to crash and burn when PCE came in line with that of previous month and above a previous month when it came to the core and non-core respectively. They didn't. So is the narrative of wanting rate cuts now dead? I don't know anymore. We'll see what's going to happen this week, and we'll discuss this more in the debate part of the video. But with that said, that pretty much does it for this segment. Take it away, Mike.
So which of the 7 elephants do you want to talk about first?
7? You mean like 7D, right? Because at this point of the game, it's like every single week something new is happening, and every single week is crazy, but the following week tops it.
Yeah, and you know what's funny? Me and you didn't even talk about that Jerome Powell's up on top. That's how much news has been going on where we didn't even pay attention that the Fed was coming up.
No, the FOMC, no one knew that was coming up.
Well, yeah, but me and you, like, we weren't focused on it, right? We weren't talking about it until we're like, oh, there's an FOMC meeting next week.
Yeah, pretty much, right? Pretty much. The PCE kind of just took the spotlight, and in my section, I'm befuddled. I am speechless. I am wordless because I don't even think wordless is even a word. But what happened here? It's as if the rate cut narrative no longer matters. What's happening here?
Well, it's been the well, yes and no, right? So they wanted to focus. What have the bulls been doing consistently, right? Remember, they're positioning and they have more exposure in the market, so obviously they're going to try to step up and basically cover their positions or make it go their way. But they just looked at Microsoft and Google and they said, okay, everything's hunky-dory. 2 companies reported good earnings and went up. Everything's smooth. There's no such thing as stagflation, which you did call. You said back in October, we're going to get stagflation.
Makes sense. It makes sense. Granted, we still have a lot more months, and that could still be proven wrong, right? But what we're seeing right now is that, at least for the month of March, inflation is staying A, the same, or B, going up, which in this case, I love it because we see both, right? On the core one, it's staying the same, and then on the non-core one, it went up by 0.2. 0.2.
Well, no, core stayed the same.
That's what I said.
Oh, okay. You said okay. I
said on the core one, it stayed the same, and on the non-core one, it went up by 0.2.
Yeah, but actually, you weren't necessarily like. I didn't really know the definition of stagflation, like the official definition, and it's when inflation outpaces GDP.
Yeah, right. It's high inflation with low economic growth, which we also got the GDP numbers,
which was a slap in the face.
Slap in the face, more like a kick to the teeth. They were expecting 2.5, which is pretty much on par, right? Because ideally you want inflation to be 2, GDP to be 2.5, and there you have a 0.5% increase, right? Yeah, it was a lot lower.
Yeah, and now you're flirting, like if you use the same delta, you're flirting with zero soon, right? Like not saying
Or
this
even
quarter.
negatives.
Well, I think you got to get to like sub 1, right? First. Now,
Yep.
I could be completely proven wrong and we could go 1.6 to immediately to a negative, right? Like that can happen. Not high probability, but GDP shrinking signifies the government money printer ain't working so well anymore.
Well, not even that, right? Sorry, it's not even that. It's in addition to that. What does 2 negative quarters of GDP mean?
No. It's 3 now. Come on, get
Oh,
with
it's
the times.
3
It's
now.
3
Oh,
now.
that's right. That's right.
Yeah,
That's
yeah.
right. I forgot
And then,
that they
and then
changed
when
that
it's 3,
definition.
it's 4. When it's 4, then it's 2 years. And
Right.
it's that's a bad indicator.
No. Then after 4 quarters, it is just no negative GDP is actually good for you.
Yeah, I could see
Right?
that. I could see that happening.
But in
Well,
all
it's the same
seriousness,
way.
though,
It's the same
what's up?
way like this, right? Remember we talk about this. I talk about this till I'm blue in the face.
That the
Economists
version
polled
of
that the
Yep.
recession, the yield curve inversion, does not matter anymore. I'm just sitting here
Right.
watching this. I'm just like, and then add a little hump here, go there, and goodbye.
Yeah. And when that thing uninverts, that's when it's the problem, right? That's when everything just comes crashing down. But this is something that I really want to talk about as well. It's regarding the fact that inflation is coming out the May 15th, CPI, right? What do you think is going to come in at with oil skyrocketing the way that it is right now?
Well, look, we
with
can do
gas
a-
prices skyrocketing.
We can do a quick analysis, right? So we've done this multiple times to talk about what we see on oil, right? Let me just clean up the chart real quick here. And then we can go back to what happened a year ago, right? Where we can kind of speculate, right? So let's just go to a monthly view, right? So we can go make it a whole lot easier on our eyes. And let's find, what are we, 2023, right? 2023, but we're in, the May report is going to be April, right? So our
No,
average
the May
price.
report. No, the May report is going to be June. The
No, you're
April
ta-
report. The
no,
April report
that
will
comes
be
out
in
in
May.
May
Yeah,
is going to be
the
for April. Okay.
Yes,
Just making-
that's not what you said, though.
Yeah, so April's prices range from $83 to $73. This month, which is April, we've transacted on the high end to the upper end. So the average is, so unless oil transacted for a large period of time in April, and we can actually go back to the dates, right? So looking at this, we basically, during April, so April 1st started at $79 a barrel, and then
Okay.
subsequently decreased the entire rest of the month. So we stayed
And that's for 2023 or 2024.
2023. So we stayed, let's say our average price was $78 a barrel. So the same time in April, we started at $83 a barrel and traded above and some below. So I would say that oil would be on par with last year or slightly higher looking at this.
Not to mention, isn't that Golden Cross right there?
Yeah. So oil actually had it. I mentioned this before. That was a golden cross on oil supporting the bounce here. I'm seeing $92 a barrel crude. That's what I'm seeing in the future. But let's do the same analysis, right? Like let's take, like you mentioned June, right? So let's say the May report doesn't screw you up royally. Let's say the June report's the one you got to really be worried about. And if we look at June, right? So which is going to be the May report, doing the same thing, we can clearly see that oil transacted mainly around that $70 a barrel. You ain't anywhere close
Near that.
So if you don't get shot in May, you're thoroughly screwed in June unless something unforeseen happens. And to be unforeseen, you would have to break all 3 critical levels to even get back to the median price of June. So I'm just looking at this like, I don't want to be here. Like, right? We didn't even, like, to equal oil out, you have to go all the way to August. So you'll see that report in September, which is way too late for the Fed to do anything, to have, like, the quote unquote, it's not a trend, right? I wonder how he's going to spin it this Wednesday on that.
Yeah, but here's the thing, though. We do have, well, I don't know if it's a catalyst or not, but we do have one thing that just occurred 2 days ago. that is coming off the back of the bank term lending program ending, and that is the fact that the Philadelphia-based Republic First Bank went bankrupt. Now, it's a small bank. It only had, I think, around like $10 billion worth of total everything, right? Deposits and assets. $6 billion, I believe, in assets, $4 billion of deposits. It's tiny. However, is this an omen for things to come?
I would argue
Right?
yes. We've been saying that the Fed has held banks, and we're seeing even on the earnings statements that these bigger banks, right? The ones that know they're safe, right? Like JP Morgan could literally put in their earnings statement, we can do whatever we want, and the Fed's going to bail us out because we're just
Right.
so dang, like we're a STIG.
They have the economy hostage, basically.
Yeah, they're a STIG. If you're one of the 10 STIGs across the world, so Deutsche Bank, J.P. Morgan, Bank of America, Citi, a couple other banks out there, don't remember off the top of my head, but they're a systemically important institution, meaning they cannot go under because they take the entire economy with them, right? So
Right.
looking at this, I'm like, okay, they're even saying they're preparing. Why would they be preparing if they know there's no consequences unless they basically know that the government's going to be the one that's going to be the problem, right? And I started this off in the video at the beginning. The 30-year is right back where we were in 2008 and actually pivoting. If we go to a monthly view so you guys can see this a little bit better, we're pivoting off of the 1998, 98 low, right? So we've pivoted and broken above it. So this is just bonkers crazy that we're wiping out almost 3 decades of lower yields. And when we thought when we were back here that, oh, the Fed's going to, the narrative was no more hikes. Well, the bond market doesn't believe you anymore.
Yeah, it's getting to the point that we're I don't know if we're gonna get a hike, but we're not going to get a cut, right? But again, that's my prediction. 6 to 9 months.
Well, the bond
what's
market
currently happening.
Look at the bond market, right? Look at what is the 2-year at, right? The 2-year's at 5%. That tells me that in the subsequent 2 years, we're going to get 2 rate cuts. If we stay the same, right? That's right. What the bond pricing is in at right now. This thing peaked out at 5.2. So
2 rate cuts?
Yes, next 2 years.
Okay.
So this
That
is what
makes
the bond
sense.
market is saying. The bond market's saying you may, in the next 2 years, that's what it's pricing in, get a rate cut. So they're demanding equal to what the federal funds rate is going to be in 2 years or slightly higher. So let's say you get 3 rate cuts over subsequent 2 years. That's not the narrative you have now. The narrative is 3 this year, which if we look at the 6-month, right? It's basically calling BS like no tomorrow on that because
look at
3
all
would
those red
mean
candles.
4.75.
Look at all those green candles, though.
Oh,
Absolutely great.
it's like this is what happens when you take an entire bank's portfolio and turn it upside down.
So let's continue going on with that, right? Because we do have our glorious president or he said already that
The fearless
don't worry,
leader.
we're gonna get, huh?
The fearless leader.
Yeah, the fearless leader. Yeah, sure. The only thing he's fearing is his diaper. But he has come out and said that we're gonna at least get 1 rate cut by the end of the year. The thing is that needs to happen by September. Because if it doesn't, then it'll be way too late for the election. Because that's the only reason why that's happening. Now, sticking with that same kind of thinking, though, did you see what he said regarding the new taxes that he wants to implement next year
You mean
if he gets reelected?
the Looney Tune idea?
No, it's not even Looney Tune, right? It's straight up, it's straight up catastrophic if it were to happen. I don't know if you have the story pulled up. Maybe you could find it really quickly.
So right here.
Yeah. So I did cover this on the live stream, and I want to cover it here again because this is catastrophic, and I've actually thought of something else that could come out of the second one of those 2 points that Watch Guru right there is saying. So for all those of you who do not know, Biden's saying that if he gets reelected next year, he's going to propose a 44.6% capital gains tax. Okay. Now, this is on qualified gains. So basically if you hold it for longer than a year. That's basically what's going to happen there. That would be catastrophic, right? However, what's even worse, at least that 44.6 makes sense in the sense that it makes sense. It's bad, but it makes sense. The one that doesn't make any a sense is the second point. If you could read it for me.
Sure. The proposal would also include a 25% tax on unrealized gains for high net worth individuals.
Now that high net worth is
what does that
for
mean?
Anybody making it's he said $400,000, but the thing is that inflation will eventually make $400,000 be the new $10,000.
Yeah, but haven't we heard the $400,000 narrative before with the IRS, where
Correct.
we're not going to raise taxes on anyone other than, again, I'm not going down that rabbit hole because everyone knows history speaks for itself.
Yeah, absolutely. But that 25% tax on unrealized gains doesn't make any sense because I've talked about this on the stream. Where is the cutoff, right? Could you imagine holding onto a company by December 31st, you're up $20,000. The year switches over to the next year. Now you owe a 25% on that $20,000. A month in to that new year, that company now goes bankrupt. You lose everything. You lose the gain. You lose the principal, and you owe a 25% tax on that.
How would you even manage that, right? So it's like, okay, unrealized, and then when you realize it, so then I have to go make my taxes even. So for all those that don't file complex tax returns, like I'm just speaking for myself, when you trade a lot, the tax software struggles to calculate everything. You got to go through with a fine-tooth comb. So imagine having the standard now where you're trading a crap ton and you're calculating net losses, net gains. And it's already fun, right? You can feel the sarcasm. But then you want to add this more convoluted. I'm like, oh, now it makes sense. You want to implement this so you can have a reason to audit everyone into oblivion. Got it.
Well, So this is something that I just came up with after the stream, actually. So if you could scroll up, though, please scroll up. This is something that actually came up with the stream. The consequences of that 25% tax, right? Or even that 44.6. What was that going to cause people to do?
Not invest in the market.
Not invest in U.S. companies, meaning that they would sell.
Yep.
Right? What happens when you sell? You're gonna get a massive dump, right?
Yeah.
Right. So imagine this. This gets implemented. People begin to sell before it gets implemented. Markets completely crash. People's 401k is now in the gutter.
They're non-existent.
Right. They're non-existent. People's 401ks are in the gutter. The Fed comes in saying, we need a provision. Don't worry. We're going to come in and we're going to buy stocks to keep the market afloat. We're doing this because of people's 401k, though. It's okay. We're buying stock, guys, but it's because we're trying to save people's livelihood. Congratulations. Now the government owns the means of production.
Yeah, and we actually had a comment on the stream that by the Outlaw 007. He mentioned, how can you tax unrealized gains? When do you want to pay tax? When do they want to tax them? When your portfolio is peaking? And then he says, get out of here. And I'm like, all excellent questions. It's the government. Of course they're going to find a way to break your brain when explaining it to you.
I love it because people say, but that's illegal. I'm like, they're the ones making the law. They're the ones deciding what is legal and what isn't. What are you talking about?
The government legalizes its own abuse.
Right. The government can legalize or make anything illegal. Like, this is just how they work. So this is something, guys, that we really need to talk about. Hopefully Trump wins, but be prepared for something like this to happen, because if it does, get ready, because this will give the Fed the green light to buy into the stock market. Remember, the Fed wasn't buying mortgage-backed securities. What caused them to buy mortgage-backed securities? The 2007-2008 crash. Well, if the markets crash to the point that, 90% losses essentially, the Fed will come in, the Congress will give the Fed the green light to be like, start buying stocks because we need to fix people's 401k. Boom, right then and there, the government owns the means of production by owning stock.
Now, I don't think that they would afford it, right? The problem is that, like, disregarding all this, going back to this Grim Reaper sitting here, like, you remember when we were talking about the 2-year, I was like, this looks like a bear flag pattern here. Maybe the Fed actually is going to cut rates. And then the market basically said, hold my beer moment.
Yep.
I'm looking at this, I'm like, okay, so I'm staring at a liquidity problem. I'm dead staring right at a liquidity problem where the government cannot continue to spend at these higher rates, and you just keep like the spread. You can't force market participants when there's still a portion of the free market, right? The bond market is one of those. There's still a free market component in it. The Fed can influence as much as it wants, but there's still a portion there that people just don't want to buy your crappy government debt
Right.
for the price you're offering. And
Right.
that tail on those bond auctions is getting worse and worse and worse. I'm not hearing that it's getting better, right? So add all this on top of it. Remember, the market brings the future into the present. And they're going to look at it and be like, okay, so instead of 5% because you guys are complete idiots, you're proving that you're complete idiots and morons and even worse than I thought. So I want 6%, right? Or I want 7%. No one trusts you to pay it back. So they want to be compensated for that risk. And I'm just like,
Yep.
like PCE came out, right? And the bond market is basically telling you like, yeah, the Fed is screwed. And that's case in point. Now what happens if CPI comes in at 4?
Which it will.
Four and a half. I'm like, yeah, oil, I don't think it'll happen this coming month. Then again, I also said that about this last month, and I was pleasantly surprised. And I would thoroughly be pleasantly surprised because that means June is going to be blowout like no tomorrow.
Yep.
But I'm going to patiently wait for that June report and then and I hope Powell digs himself into a deeper hole this Wednesday. I truly hope he comes out and feeds them as much hopium as we can, because jumping off a higher cliff would bring me so much pleasure seeing that transitory lie come back in the form of we can still cut rates this year.
Yep.
When he has to eat those words where there's no time left, right? So he has to pick between, he has to start being honest and pull a Jackson Hole again and send, like, just to put into perspective what happened in Jackson Hole, right? Just so everyone can remember what happened. This is what Powell sparked in Jackson Hole right here. This massive move. That was his Jackson Hole speech where he was basically higher rates, and higher. 100 basis points threatening. And then we stayed there. And then we went sideways for quite some time. So we need one of those again in order to quell the market's, let's say, fervency.
Stupidity?
Yeah, I was going to say fervency, stupid, whatever you want to label it as. But we need that. Or there's going to be option 2 where you basically hope, again, hope is not a strategy in this market, that inflation is going to magically come down when, let's just refrain back to this original thing, you have a ticking time bomb sitting right here for you. And the last time I checked, OPEC was not in the business of losing money. So what incentive do they have to not cut more oil, right? After you just screwed with their entire operation in Iran and everything, like all those countries have a bone to pick with you. Yeah. And so, what more do they want than just say, yeah, $100 a barrel crude?
So, to sum it all up, guys, markets this week absolutely just went bonkers, especially on Friday, even though inflation came in super, super high. So how is the needle looking like right now?
Well,
are we at extreme greed? Oh, we're still at fear. Okay, I was looking
slowly back into neutral.
Slowly, but we'll see. By the way, there's a ton of earnings happening this week, guys. Mike, AMD is Tuesday.
Ooh.
Yeah. So we have the 3 major days will be Tuesday, Wednesday, and Thursday. Mm-hmm. Tuesday because of AMD, Wednesday because of the FOMC, and or is the FOMC Wednesday?
FOMC is Wednesday, Apple's Thursday.
And then Apple's Thursday. So guys, Mike, specifically to you, when it comes to the live streams, what do you want to do when it comes to live? I could do all 3 days. I don't have a problem with that.
I can do Wednesday, Thursday, just because I have to be somewhere Tuesday, but I maybe get back in time for it. So no promises on Tuesday.
Okay, no promises on Tuesday, but guaranteed Wednesday and Thursday. Yes. So guys, I think that'll pretty much do it for this video. Make sure to like, subscribe, comment. Really does help her with the algorithm on YouTube as well as Rumble. Make sure to, of course, follow us on X, and the link to our Discord's also in the description below. It's available for free. Join. It's a work in progress, right? We're slowly, if you could go to it, by the way, it's a work in progress. We're slowly making it better as we just do more and more things. You know, I plan to add a lot more to it So it's free, guys. Join it if you want to have people who think alike and that kind of stuff. You guys can post your trades, etc. It's available for free. So yeah, make sure to follow us there as well. And that pretty much does it for this video. Again, this upcoming week, probably, we don't know yet on the live stream for Tuesday, guaranteed for Wednesday, and guaranteed for Thursday. So thank you so much for watching. Peace out, and we will see you all next time.